All right, let's go ahead and get started. We have a lot of information to get to. I want to make sure that we're being efficient with the time that we have allotted. I appreciate everyone joining us today. Hopefully you're able to join us this morning for our Premium Finance 101 discussion. We kind of reviewed what premium finance is, kind of talked about some kind of case designs, and answered a lot of great questions that you guys had. So kind of a natural progression for our afternoon session, Premium Finance 201, is to go a little deeper. And then we also have an exciting addition where we'll get to hear some information from the lender side of that transaction. So kind of a nice end cap to kind of this premium finance focus that we've done today. So Jason Van Zandt and our advanced markets team, he's going to moderate the session. He's going to introduce our guest speakers today. Jason?
Thanks, Kyle. Proud to have Renee Stefan and Colin Danley from Bank Direct with us today. They're one of our premier premium finance lenders. I think over the last 3 years, they've done over 19 cases, resulting in over $10 million of target premium with us. I went to public school, but if you do the math, that's about $500,000 of target premium per case. So obviously they're very important relationship for us. They do a great job. They're great to work with. We hear nothing but good things about them from the field, and glad to hear what they have to say today. They'll give you a perspective on their take on premium finance, and also give you some tips on how to make your case go smoothly, and kind of what they look for and some of the requirements that they need when financing your case. So with that, I'll turn it over to them.
All right, thanks, Jason. My name is Colin Danley. I'm a co-head of Bank Direct Premium Funding along with my colleague Renee. Appreciate the opportunity to present to you guys today, and we certainly value the relationship that we've developed with Accordia, and very specifically Jason and Eric Tebow over the last several months and years. So just to kick things off here, to give you a sense of who we are, Bank Direct Premium Funding, we're a part of an entity called Bank Direct Capital Finance, which is a subsidiary of Texas Capital Bank. Texas Capital Bank is predominantly a business bank headquartered in Dallas. We're up in the northern suburbs of Chicago, so it's a little bit of an interesting fit geographically, but that's who funds us. They are a $32.5 billion asset bank based on their most recent financials. They were recognized recently as one of the best banks in America by Forbes. I can tell you that being part of a somewhat large bank certainly has its challenges, but Texas Capital has been a great fit for us because they've got a very strong balance sheet, are very encouraging of us doing our business, and effectively have kept us out of as much red tape as possible with regards to, OCC oversight, aside from having to comply with what everyone has to comply with. But, they very much provide us the money to run our business the way that we want to run it, and give us a lot of flexibility to, get creative in the marketplace, which has been excellent. Bank Direct itself was founded in 2005. It was founded, and it still is, predominantly a commercial insurance premium finance company. It was founded by a couple of industry veterans, one of whom worked for what is a competitor of ours today, another who ran a large brokerage firm who runs our sales team. They teamed up with Texas Capital in 2005 and have grown into one of the four largest players in the industry. There's really four. There's a lot of licensed commercial premium finance lenders, but there's really four that are the dominant players in the industry, and Bank Direct has grown into be one of those four over the years, and has really experienced tremendous growth each and every year that it's been in existence. In 2008, Bank Direct became involved in life insurance premium finance. That was also the year that I started with the bank, and the year that I first met Renee. So he came into our office. He was working for a small family office at the time, and was pitching life insurance premium finance to us. And in 2008, that became our first, and for a while, our only lending relationship. Over time, we started doing business with a number of closely held relationships, and we really were getting some great feedback about our process and how we handled life premium finance, but we weren't doing any active marketing, and we weren't looking to grow the business beyond, kind of a niche part of our commercial premium finance group. 2018, we had gotten just based on these referrals, we'd grown to a size where we really needed to make a decision as to what we were going to do with this business. Is it something that we wanted to actively cultivate, or something that we just kind of wanted to do as a side project? But at the point that we had grown the portfolio to the size that it was getting to be a larger and larger side project. So we felt that it was a natural time for us to really start expanding ourselves in the marketplace and getting our name out there. But we didn't have a lot of great experience with agents, and we really didn't know the marketplace beyond those that we had forged relationships with. So roll forward to late 2018, we reached back out to Renee. We had been in touch with Renee for quite some time. We asked him to come on as a consultant. He did a marketplace analysis for us just to see. We thought we had a good product that would fit well in the overall marketplace, but we wanted someone to help us prove that out. He did so, and in 2019, on January 1st, Renee and I teamed up and have really been starting to actively market the Bank Direct Premium Funding brand since then. So I've been in the business since 2008 when we started on that limited basis. Renee's involvement has gone back much further than that, in fact, to the beginning and creation of the industry. So I'll let him just give kind of a brief overview of his background and what he's brought to the table.
Thanks, Colin. So I'm pretty sure that I know quite a few people who are on the phone participating in this webinar today. My background really, I've been with ING for a very large part of my career. I think I was transferred to the US in '98 as the token Dutchman, and was running ING's banking business in the US. As part of that, we had a country committee with myself and some people from the insurance side, Dave Wilken being one of them, Jimmy Galda being somebody else. And during one of those strategic meetings, the idea of life insurance premium finance was offered. At that time, we set up a company called ING Finance, which I think a fair number of you will be familiar with. And we, together with AI Credit, were really the only two parties in the market at that time that were actively promoting the financing of life insurance premium finance. So I've been in the industry since then. After ING, I started a company with some friends of mine called Inscap Management, where we made loans under Concord Capital Funding. And in 2010, I sort of left the industry for a while, got back in 2018, 2019, following my conversations with Bank Direct. And as Colin mentioned, we really started to build a business that was outward focused in 2019. We built a loan management system from scratch. We did a whole bunch of things that really positioned ourselves to be a market competitor. And based on relationships that I've had from the past, but largely thanks to the approach that Bank Direct has always taken vis-a-vis life insurance premium finance, and that's something we'll get into in a little bit. Our business has grown just amazingly fast in 2019, and that momentum has definitely carried over into 2020. But that sort of in a nutshell is a little bit of my background in the industry, and I'll leave it the next couple of slides up to Colin.
Yep, thanks. The number of conversations I've had with Renee and other agents discussing their time with ING or other stops that he's had along the way is honestly getting tiring at this point. It's pretty hilarious. Everyone has come across one another in this industry at one time or another, that is for sure. All right, so for those of you who are new to this, premium finance basics, the first one is a big duh. It is an alternative to paying for annual premium. So we're making loans so a client can pay for their insurance premium instead of out of pocket by using some leverage We fund the loan. It gives people a way to preserve their current cash flow. And I'm sure you've all heard the saying that, rich people didn't get rich by using their own money. They got rich by using other people's money. So that's the same concept that's at play with life insurance premium finance. People that we have found to be great candidates for premium finance are those who are specifically asset rich and cash poor. We see a lot of people who are, for example, entrepreneurs who have built up a business where the business itself might have, a pretty good value to it, but because it was internally developed, they're still pouring all of their cash into their business until the point down the road where they might look to sell it or to transfer it on to another generation. Alternatively, a lot of people that are involved in real estate development tend to use up a lot of their cash flow investing in their real estate assets and maintaining their real estate assets. Those people tend to have significant net worth on paper, but they may not have a lot of idle cash sitting around that they want to use to pay what can be pretty significant insurance premiums, especially with the types of products that are premium financed. The transaction is absolutely not without risks. Obviously, interest rate risk is one of those. These loans, at least through us, are written on a variable basis. So the loan will be indexed for now to LIBOR. In the future, when that goes away, it'll transition most likely to SOFR. But if market rates go up, the rate that the client is going to use to borrow is going to go up. The offset to that is usually that's in times of economic prosperity. So returns under the policy tend to be correlated. Increased returns on the policy correlated with increased rates on the insurance premium finance loan, but not always. The other thing is we make loans collateralized by the policy itself plus gap collateral. Over the long term, the expectation is that the money that's put into the policy is going to generate a return that's sufficient to chip away at and hopefully reduce the need or eliminate the need for that gap collateral. But the path to get there is not going to be a smooth one. So a lot of people will look at average historical returns when they're trying to figure out, okay, what is this policy going to be worth in 5 years? Well, it's not going to be worth the value using an average historical return for 5 years. It'll be something else, could be more, could be less, but it's important that the client understands that the path that they will need to pledge collateral under will be a choppy one. Premium finance has applicability both in individual and corporate context. Most of the loans we make are standard deals for individuals for estate planning purposes, but we also do a number of deals in a corporate context for key man policies, buy-sell agreements, and employee benefits and retention. The corporate transactions are a little bit more complex, both from a structuring standpoint and from a lending standpoint, but we've done a number of these to the point where for us, as long as what's kind of presented to us was done the right way, the lending part of the deal should be, relatively speaking, pretty simple. The way we do business, the loan must be fully collateralized at all times. The collateral that is pledged against the loan consists of the cash surrender value of the financed policy plus some additional gap collateral. We give a 100% weight to the policy value, assuming that it's written by a carrier such as Accordia. And the eligible value we use is the 13-month low point value of the policy. So we really look at these on a point-to-point annual basis around the time of the policy anniversary date. We're going to look to see if an additional premium is going to be funded. If so, we get an illustration showing the policy value for the next 13 months. It's run at minimum returns and current charges. We accept the 13-month value, and anything else that needs to be pledged needs to be done through additional gap collateral. What we're asking to be collateralized is the sum of the outstanding loan. So like, let's say we have a $1,000 loan with $10 of interest. We want that $1,000 secured plus the additional $10 of interest that's going to be due for the upcoming interest period. So the total value of the collateral pledged needs to be $1,010. Typically, interest is then paid in advance because it has to be collateralized anyway. People don't want to deal with it and they just end up paying in advance. But if it's secured through the upcoming annual period, we allow it to be paid in arrears, and in certain circumstances allow it to be capitalized if it's allowable by the carrier. Collateral that is used as gap collateral, really the way to think about that is that it should be liquid collateral, should be convertible to cash within approximately 48 hours. If we're looking at our portfolio, what is most frequently used for collateral is either cash paid into the deal, so the policy itself can be used as the only needed collateral. CDs held with a bank, a lot of them are held with Texas Capital Bank, but we don't mandate that that be the case. It's just that people like to use that because it's easier, or money market accounts. Those are really the three most frequent forms of collateral that we take. Less frequent are investment accounts holding equities. We'll take equities at a 50% haircut, but people want to pledge trading accounts, that's totally fine, or letters of credit or bond funds, etc. Financial participation by the insured is critical. So what we want, same thing that Accordia wants, same thing that hopefully all of you want, is persistency with our cases. We want these things to stay on the books. We want to write good business. We want to make loans where the person's going to be happy and invested in their transaction and in it for the long term. We are not calling this free insurance. By no means is this free insurance. There's money typically put in out of pocket. If not, there's significant outside collateral that is, pledged, that is part of the deal. And, as with everything else, the more money somebody has in something, the more they're going to value it, the more they're going to focus on it, and it really results in a good long-term transaction. As far as eligible borrowers and insureds, they must meet minimum financial standards. So if you look on our website, we state $7.5 million net worth is really what we're wanting to start with there, and $200,000 of annual income for the last 2 years. What we like to focus on, though, as Bank Direct, is seeing the forest through the trees. So, let's say someone's got significant net worth, but took 2 years off of working, or is retired and is pulling money from accounts that are not counting as annual income. We'll work with the carriers. We'll work with you, the agents, to figure out, okay, is this a candidate for premium finance? If so, let's find a way to move forward. But those are the standard guidelines that we look for. With that, I'll turn it back over to Renee.
All right, thanks.
Hey, Renee, I think your phone went on mute.
Oh, okay. Better?
There you are. Yep.
Oh, okay. All right. Sorry. Okay. So what I'm going to talk about a little bit is process, and the question that often comes up is, well, how long does this take? What is the process? What can we expect? And one of the things that I found coming back into this industry when I did this market analysis was that the time that it took, as well as the lack of transparency in the process was a bit of mind-boggling to me. I mean, the last few years prior to returning, I ran a financial technology firm that was all about disrupting existing transaction models. And so to me, it was very surprising that in this industry, it still oftentimes takes 2 to 3 weeks to get a loan done, which really there is no reason to do that. One of the things that has historically been a competitive advantage at Bank Direct, which is what we alluded to earlier, is that the background of the company is really in commercial premium finance. And the turnaround times, the expectations of the marketplace is that if you bring a loan file early in the morning, irrespective of the size, you almost expect an approval by the afternoon, getting documents out at the end of the day and funded the next day. Now, that obviously is unheard of in the life insurance space, but we have stayed very close to very expedient processing. And so typically, on day one, we receive a full submission package from the agent, and I'll go into what that should contain. But we receive that, we'll review it, and then the second day, we write an internal credit proposal, get it approved, and by the end of the day, we send a term sheet to the producer for the transaction. Then the third day, typically we have a welcome call with the insured. We ask a few basic questions, to ensure that the insured is fully aware of the transaction, of the specificity of certain elements of the transaction. It's a very neutral call. We have not run into any issues where the client at the end of the call said, "Man, I mean, this was terrible. Had I known this, I would have never even thought about a transaction." That simply has not occurred. Conversely, we have had a few situations where we found that the transaction structure that was presented to us was not quite the same as what was presented to the client. We have caught a couple of situations where third-party collateral was being used in the form of a unrelated party that was paid to provide collateral. Those sort of things, we typically find during a call like that, but they're very few and far in between. So the next day, after we've done the call, we send out loan documents to the producer. And, depending on the producer, some producers prefer to keep all that information confidential, including, personal financial statements and tax returns. To those agents that find it objectable to submit that through regular email, we provide a very specific secured account, a box account that information can be uploaded to, and where we also post the loan documents so they can be pulled securely from a box account. So after the loan documents have been produced on the fourth day, the producer then gets them out to the client, and we typically see it takes a few days to get the documents returned by the client. But whenever those those forms are being returned, the documents are returned, we review it, make sure that all the collateral pieces are in place, and then we fund. So really a very typical scenario between the transaction being submitted to us and the transaction being funded is on average maybe about 9 days, sometimes a little bit longer, but we have other deals where we have literally funded deals within the week after having received the package. So we turn these things around very quickly. And certainly realize that the sales process is oftentimes taking months, many months, and we don't want to add any unnecessary time at the end of the transaction, because as we all know, time kills sales, and so we are very sensitive to that, and make sure that the lending piece is dealt with expeditiously and efficiently. All right, so what is it that we need? We are looking at a few pieces of information. They're pretty standard, I think, throughout the industry, but we have created something that's called a borrower profile form, in that we're asking for some basic information on the borrower, like the name, type of entity it is, whether it's a trust or an LLC, who is the manager, who is the trustee, some basic information on the product, on the premium, on the death benefit. And in that form is also a page where the client signs that allows us to run a credit report. We then ask for an illustration run, as Colin already said, at current charges and guaranteed return. We ask for collateral calculation purposes. We look at the personal financial statement as well as the 2 most recent tax returns. We'd like to see a recent bank or brokerage statement. And then some corporate documents, simply a copy of the trust agreement or the operating agreement if we're dealing with an LLC. And we would like to have copies of driver licenses of those involved in the transaction. And then last, what we would like to see is the premium finance loan illustration. With that, we mean the illustration that is used by the producer in the sales process with the client, where it sort of shows not only the insurance piece, but also the lending piece and what assumptions are being used or have been used during the sales process. And our desire to look at that is simply to make sure that what the client has seen as part of the sales process somewhat borders reality. You'll be surprised how often we see illustrations where the loan rate starts off at 2.5% and then at some point goes to 1% for the next 19 years. I mean, those are sort of, uncomfortable for us simply because if that is what the client has seen, it probably creates an unrealistic set of expectations with regard to the performance of the transaction. And that's it. All right, then, again, one of the things that I found in looking at the industry is that it was all sort of very obtuse. With that, I mean, there was very little transparency into how the process worked. And not only that, there was this sort of black box that apparently existed, because whenever I was asking a lender, if I have a transaction that looks like this, how would that be priced? And without exception, the answer was, well, that depends. And that's sort of a puzzling answer to me, because there really is no need. We're not dealing with alchemy here. We're just simply dealing with pricing of a loan. And so we have no issue whatsoever to provide a pricing sheet, and every producer following the pricing sheet can, with a 99% certainty, price the loan at a level where we will price the loan as well. There is really no magic that goes into all of this. And we look at different elements. We look at the size of the loan. We look at what somebody does with interest. We do look at whether somebody is willing to provide a guarantee, a full guarantee, limited guarantee, or no guarantee. And all of that has a pricing effect. And so by simply following all that optionality, somebody can construct the loan that he or she feels most comfortable with, and can figure out the pricing that goes with that set of choices. The other thing, as I mentioned, our response time is I think the best in the industry. And one thing where we are also a little different is we believe in building relationships. We recognize that the insurance industry, like other industries, is a relationship industry. And so other than other lenders, where whenever you call, you have no idea who you're going to get on the phone. If you do a new deal, you're going to get somebody else on the phone. Then when you do a renewal, you have no idea who has been given your file. And here it's a little different. I mean, we allocate an account manager to an agent, and so for as long as the agent has a relationship with Bank Direct, the agent deals with one and the same person. I mean, obviously, Colin and I are always available, but on a day-to-day basis, there is one name, there's one telephone number, there's one email address, and that person learns about your business. And so it becomes a really deep-rooted relationship where there is continuity in every sense of the word. We're a pure premium finance lender. What does that mean? It means that the only way we make money is on the interest margin. We do not go on the app. We don't charge fees. And it is no asset gathering strategy. So we're not in this business as a way or a means for a private banking group to get more assets under management. We are not asking anybody at any point in time to transfer assets to us. They can stay where they are. We don't want to add an element of competition from an asset manager or relationship manager where the client is at the brokerage firm. We want to keep these people at a distance. We want to keep them happy. We don't want to threaten their income. We are purely lenders, nothing more, nothing less. And that's it.
All right. So just to wrap up here, a couple of final points. We really, to build on what Renee just said, we value transparency here. We found, as I mentioned earlier as well, that this is a small industry. Even though there's a lot of people participating, everyone kind of knows everybody. So we want to be very transparent and upfront about what we're offering you, and we're not going to offer somebody a better deal than somebody else because we like them better. We are what we are. We want to build partnerships with carriers and producers. With carriers, we really want to build partnerships because our interest, well, first of all, they hold a significant amount of our collateral. But second of all, we really have an aligned interest, and then we want to see persistency of cases, and we want good business that's on the books for a long time. And then building partnerships with producers, the more we know someone and the way that they work, the better that we can handle their transactions and really, help add value and turn cases around quickly and all of that. Exceptional deal structuring capabilities. We have done some creative things out there and want to continue to do so. We've seen a lot of deals that we believe other lenders wouldn't have been able to close that we've gotten done because of our expertise, our history in the industry, and frankly, we've got some great attorneys that are able to really, really understand the business side of these transactions as opposed to getting stuck up in the language. Like we mentioned before, we can do individual cases, joint cases, or multi-life corporate transactions. We really can handle anything from a premium finance standpoint. We have a large single borrower capacity. One qualifier to our deal is that we because Texas Capital is predominantly a business bank, we require that our borrower be an ILIT or an LLC. We can't make a premium finance loan to an individual. Renee has gotten somewhat creative with certain of our counterparties before about if they normally deal with an individual, how we might be able to pivot a little bit to set up an LLC borrowing structure that effectively does the same thing. So good to note, but not necessarily a deterrent if you're used to using individual borrowers. And the last point, which I don't think anyone's going to put complacent in a PowerPoint presentation, but when we say zero complacency, we really want to push ourselves and expand ourselves and get better at what we're doing every day. And we don't want to just sit there and get stale and stagnant and do the same thing over and over again. So, if you're thinking about something outside of the box, creative, that, would require someone to take an extra look, investigate a little bit further than just, saying yes or no to a plain vanilla transaction, please bring it to us. We're more than happy to look at it, and we really want to find a solution for you.
And that's really it.
That's it.
Thank you, Colin and Renee. It's Eric Tebow. There's a couple questions that have come up while you were presenting, and I would like to ask them of you for the benefit of our participants today. The first question is coming from one of our customers. Is there a cap on your loan? And similarly, is there a minimum on the loan? Speaking of the loan rate.
Yeah, there is. I mean, we are bound, as Colin said, by sort of a single borrower limit within the bank. A floor, yeah, we typically don't want to go below $250,000 of annual premium. Have we done deals that have a lower annual premium than that? Yes, we have. There are certain situations where somebody brings us a reasonable amount of business, and the occasional very small deal slips in. Again, we are relationship bankers, so within the context of the relationship, we'll accept a deal sometimes that is less than the ideal 250,000 annual minimum. On the upside, our single borrower limit is pretty large. But also there are exceptions. We have done one deal last year, which actually was a COLI refinance deal with Accordia, where we committed to 91 million, 91 in loans to a single borrower. That ultimately required us to get special approval from the OCC, which we did, because that exceeded our single borrower limit. But in exceptional situations for the right loan, we can do quite a significant amount for a single borrower.
Okay, great. thinking about interest rates, what is the floor on the interest rates, and do you offer a cap? Was another question.
Colin, you want to take that one?
Sure. So yeah, we don't cap our rates. If somebody wants to pursue that outside of the transaction and enter into a side agreement, we've seen people try to pursue that type of transaction in the past. With regards to a floor, it's a little bit of a moving target with regards to our bank and the economic marketplace, but typically we're instituting a LIBOR floor of 1.25%. So let's just say the normal spread on the loan would be 175 basis points over LIBOR. The ultimate floor rate on the transaction would be 3%, which would be 125 plus 175.
Perfect. Thank you. And talk about closing costs. What about closing costs?
Yeah, that's a short conversation. There are none.
I figured. I'm sorry. I'm giving you the softball questions.
Yeah, no,
the only time that we, just to be fully transparent on this one, the only time that we have to implement some sort of cost in our transactions is when it becomes more complex than what Renee and I can kind of handle ourselves. So let's just say there's a structure that is so outside of the box or requires so much additional work over a normal deal that we have to bring outside counsel in to, review the documentation. There might be something that gets passed along there, but we're talking about, less than 5% of the transactions we've ever done. Otherwise, plain vanilla deals all day, every day, no fees, and there never will be.
Excellent. Thank you. I don't see any other questions out there unless I missed. Let me just check one more time. Premium financing on foreign nationals, Renee. This is one of your favorite ones, I know.
Yeah. As Colin said, Texas Capital Bank has been a phenomenal partner for us, and they really have left us to execute the business the way we see fit. There are really one or two items where Texas Capital Bank is making its presence known, and one of them is foreign national business. We have tried, and Colin and I both are wearing the battle scars to show for it, but we have tried very hard to get Texas Capital Bank to accept foreign national business, and it's just something that they do not want to budge on, and so if we are sort of trumpeting our abilities in the marketplace, we should owe up to something that is not very competitive, and in this case, that certainly is the situation. We cannot accept foreign national business, and for that I apologize, but it's not going to happen anytime soon.
Got it. And another question that came along was this. How often does the client need to provide financials? Is this an annual basis, or is it just the first time in 5 years? And maybe talk about your loan commitment terms as well while we're on that subject, if you wouldn't mind.
Sure. So we're running through our evaluation before we're making an offer to extend credit. So we want personal financial statements and 2 years of tax returns. That will cause us to make the loan commitment, as long as nothing changes that we can see with regards to the borrower's ability to pledge collateral during the course of the loan term. We don't need anything else as far as financials. We don't require anything annually. Once the loan kicks off, we're fully relying on the collateral available to us under the surrender of the policy and any outside cap collateral that's been pledged by whoever it's been pledged by. So there's no annual renewal of that. With regards to our loan terms and our commitments on our loans, so we offer right now 5-year variable rate commitments. So if we were going to do $1 million of annual premium, our loan commitment would be $5 million with the expectation of funding $1 million annually.
Perfect. Thank you very much.
The qualifier to that would also be, the 5-year term, obviously most clients are going to be in this transaction for a lifetime. So as of now, in our history of doing these transactions for about 12 years, we've never gotten to the end of a loan term and not offered to renew the loan for another 5-year period. So our transactions have a lot of persistency. We've got loans on our books that are entering their third loan term with us. And once a loan is on the books, we know the borrower, the collateral has already been established. The renewal is really a simple process. It's mostly just us updating financial statements and everything. If we need any know your customer requirements for the bank, we'll get them at that time. And then it's just rolling the balance over for the next period.
Excellent, thank you. And another one, is there a possibility of a 5-year rate lock guarantee?
No, there is not. Well, I mean, you guys are good at picking the weak spots. Yeah, so that's when I said there are 1 or 2 things that that we are not really competing. One is the foreign national business, and 2 is the fixed rate business. We were allowed at some point. I think it was in I think it was October or
Yeah.
right? And Texas Capital Bank gave us the option to make 5-year loans and 10-year loans, and they were really 5 or 10-year loans, fixed rate loans, no caps, no swaps involved, just a straight balance sheet fixed rate loan, and and within a month. We booked, I think it was a little over $80 million of new loans out the door. So not commitments, no actual money disbursed. And I think we scared the living daylights out of the treasury people at Texas Capital Bank. They had never expected that us being able to offer that would lead to the kind of volume that we witnessed within that month that we did it. And so as a reaction, they literally yanked that option for us, and I'm not sure if it will ever return. But at this point, if people ask, can you offer a fixed rate product, be it through swaps or direct balance sheet fixed rate? Unfortunately, the answer is no, we cannot do that.
Perfect, thank you. Well, I think that covers all the questions. Again, I want to thank you personally, Colin and Renee. You are certainly living up to your promise, and that's being a great partner for us at Global Atlantic and Accordion and myself in the Western region. And I'll turn it back to Kyle and Jason and see if they have any closing comments.
No, I echo those comments. Eric, thank you so much to Colin and Renee. That was wonderful. We did get several questions about the recording. This session was recorded, and we'll get that out to you in a follow-up, probably looking at early tomorrow as opposed to later tonight, but we'll get that information packaged up to you. Also, don't forget the summer training camp series will continue on next week, where the focus will be business continuation. So you should get a registration email sent to you tomorrow to get registered up for those sessions as well. And we just appreciate the commitment, the attendance, the great questions. And as we always end the calls, let us know at Global Atlantic what we can do to help you out. We have tons of resources here. If you have interest in looking into some premium finance opportunities, Jason was on both our calls today. He's a great resource. So connect with him and his team and see what they can do for you. So thanks again, and have a wonderful night.